Hey, what's up, everybody? It is Thursday, January 23rd. All right, I just today sent out my weekly EIA petroleum analysis from the EIA Weekly Petroleum Status Report. So if you want to get a copy of that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. The link is in the description below. Let's talk a little bit about oil. You know, we were short up around the 59 level. I have been saying, and I put out a number weeks ago, that 55 was probably a level we would hit. We did see commercial oil interest come in as buyers at the 55 price level back in December. So they saw some value there, and we were short up near 59, and so today we got a little bit long at 55. Interesting report, I have to say, and again, if you want to copy that, go to my website, but there were some positive developments finally, because we've been seeing a number of weeks with some very negative developments in terms of supply and demand, particularly in terms of demand. But we saw a nice rebound in distillate demand. Now, you may recall, I've been talking about distillate demand because it plunged off a cliff, and that may have some connection with the economy, pointing to a slowdown in the economy, and there's other things that I have been mentioning, bank credit, etc. But we saw a nice rebound in distillate demand in the latest week. Crude oil inventories came down again, and now at the lowest level in several months. So we're seeing a tightening in crude oil inventories. The problem is gasoline. Record high 260 million barrels of gasoline. So this is going to be, I guess, a headwind for the market in terms of oil rebounding that much. But you never know. A lot depends on the stock market. A lot depends on how the economy plays out. And as you know, I've been looking for a slowdown in the economy based on a number of factors or things that I've been following, which are giving me indications of that. Now, it may be temporary or it may not be. If you want to get more insight on that, again, you have to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Let's talk about the stock market today. We opened lower. We had a mixed close. Nasdaq closed at a new high. S&P a little bit under. Dow was down. However, we got Intel after the close. Beat earnings handily. Stocks up around 7% after market. By the way, we've been long Intel for a long time at much lower levels, so I'm happy to see that. So probably the market will make a new marginal new high. This is how, in general, this is how market tops are made. Bottoms are sometimes different. Bottoms could be capitulation, spikes down like we saw in December 2018. Sometimes bottoms are a process. It takes a while for a bottom to develop, but tops are generally like this. It plays out over a period of time. It is a transition from strong hands to weak hands, a distribution, as some people like to call it. And speaking of weak hands, I mean, in the weekly AAII weekly sentiment survey, once again, bullish sentiment now at the highest level since September 2018. And if you think back to September 2018, you might recall what followed in October, November, and December was a big and very scary market correction. Neutrals. Remember, I was talking about neutrals all last year. I said the neutrals, this market is going to keep going up until the neutrals finally can't take it anymore and they jump off the fence and start buying. And that's exactly what we are seeing happening right now. The neutrals are now they dropped again last week. They're at the lowest level since April 2019. So think about it. They sat on the fence, they watched, they looked, they said, oh, we're not getting in. The market was going up all last year. No, we're not getting in. We don't believe in this. And now they're jumping in like crazy. We can't take it anymore. We got to get in. The neutrals are running in. Bearish sentiment is very low. So you have three things aligned there. High bullish sentiment. The neutrals all jumping into the market now after sitting there for a year on the fence. And bears very, very low. Not to mention other things like the put call rate. A lot of things I look at, okay? So this is a top being formed here. Now the key thing, somebody said, well, you can't predict the market. You're right, I don't try to predict the market. What I try to do is predict the economy and basic conditions. Because the markets, plural, will follow that. Whatever we're trying to do, whether it's in stocks, whether it's in bonds, whether it's in commodities, whether it's in currencies, you got to look at basic conditions. So this is what, this is everything that I focus on. It's not the market per se. It's about give me the macro picture. I've given you the macro picture, basic conditions, and then we can construct a strategy, a scenario of how to play that. Some guy said, well, you can't, it's a waste of time. You can't, I agree, you can't predict the market, but you can have a prediction or an educated guess or a forecast about the economy if you understand MMT, policy, the effect of policy, the right things to look at. Like I'm not looking at things, the numbers coming out that tell us what happened in December. No, I'm looking at forward-looking things that not show us what the conditions are, but the things that create the forward conditions. The fiscal, right? The spending, the taxation, bank credit, the things that literally create the forward conditions. So there's things I'm looking at right now that are, throwing up a little question marks right now about the strength of the economy. Finally, let me just say this. If you want to get into this, like people come to me and they're always, oh, MMT, that's fantastic. Finally, I've been following MMT, and here's a guy and he uses the MMT to invest and trade, and I'm so excited, and I've been studying MMT and reading all the MMT academic. That's great, that's wonderful. And I want to learn how to trade, and I'm all excited. But it's not about, I've said this a million times, it's not about any particular system. It's not about any particular even analysis. Although I think, what I use is the best because of the understandings that are applied. But it's about, again, it's about the mental game. It's about sticking it out. It's about mental toughness. It's about resilience. In the markets move around all the time. Most of market movement is noise, and people try to ascribe meaning to much of what is just noise. But in that concept of noise, it means like most of the time, you could literally take any position, like blindfolded, not knowing even what you're doing, and have an opportunity to make money if you know how to control yourself and how to control the money that you are playing with, managing it properly. Everybody thinks it's some kind of system fairy that's going to take them there, and it's like, they come in, spend 2 weeks reading my thing, or 3 weeks, this is not for me. I got to learn how to do it. Look, there's apps out there on the phone. It takes 5 minutes to learn how to buy or sell a stock. It takes maybe 10 minutes to learn how to do a Forex trade, right? Things are on your phone now, on an app. That's not the part that's hard. That's not the part that needs to be taught, and you need to read books, no. You need to train yourself. Mental training. Mental toughness, resilience, ability to deal with stress, with discomfort. That's what gets you there. That's the key that opens the door to where you want to go, which is success. It's not about some technical thing like I got to learn which button to push to buy and which button or which stock am I going to buy. Look, Warren Buffett made $100 billion investing in companies like Coca-Cola. He wasn't scouring the landscape for the next Apple or Amazon. No. But the guy has mental game, man. So that's what it's all about. Anyway, that's it for today, man. See everybody tomorrow. Bye-bye.